Hello, my name is Aldrich, Growth Loan Officer here at Bridgeway Capital. And today I'm here to talk about what to expect when applying for a loan. But first, let me tell you a little bit about Bridgeway Capital. We are a community development financial institution, or CDFI, located in Pittsburgh, Pennsylvania. Our main office is downtown Pittsburgh. We also have a satellite office in Homewood community. We have an office in Erie and an office in Uniontown, and we serve 15 counties in western Pennsylvania. As a CDFI, Bridgeway Capital is a mission-driven lender. We look to finance projects that are going to help create social and economic impact, either through creating jobs or revitalizing neighborhoods, or helping a business get their first start. We provide loan options available to small businesses. We fund real estate projects. We also can lend to nonprofits. At Bridgeway Capital, we like to say that we are more than lenders, but we are your lending partner. So if you're applying for a loan with Bridgeway Capital, there's various uses or various ways that we can help with with financing your project. It could be working capital for operating expenses, or startup capital if you're launching a new venture. If you're an existing business and you're growing and expanding, we can provide growth capital. If you need to purchase a new truck or a new piece of equipment, or if you're purchasing and renovating real estate, or maybe it's all of the above, Bridgeway Capital is here to be your lending partner. So what do you need to get started? For any business that's a startup, which will be pre-revenue up to 3 years, we require a business plan and financial projections. If you're an existing business, or if you need funding for a real estate project, we'll ask for a vision statement for the project as well as the use of funds. And don't worry, there's plenty of resources available to you to help assist you with getting ready for your financing. You can go to a small business development center. Locally here in the Pittsburgh area, there's University of Pittsburgh as well as Duquesne University small business development centers. If you're up further north in the Erie area, there's Gannon Small Business Development Center at Gannon University, or Clarion Small Business Development Center at Clarion. If you're further south of Pittsburgh, there's St. Vincent Small Business Development Center. Also, there's the local office to the Small Business Administration, or SBA. You could visit sba.gov for a number of resources that they have available on their website. There's SCORE chapters located all throughout the area. SCORE is a group of retired executives that are able to assist with your business planning or help you with business strategy. Your accountant could be a great resource to help you with your financial projections. Or your business coach. If your business coach is not able to assist you directly with your business planning and financial projections, then they should be able to connect you to some of the resources I mentioned above, or even other resources that they may be aware of. So great, now you have your business plan and projections together, and you're ready to go out looking for financing. There's a number of lending partners available to you, and if you have a project, you can work with one or a number of these lending partners. So let's talk about a few of them. Commercial banks. This may be your first stop if you're an existing business because you may already have a relationship with your local banker. Some of the pros of working with commercial banks is they have a number of options. You may already have a line of credit with them as well as your deposit account. They have credit cards as well as loans for your business. But what may be challenging is commercial banks often are restricted to their credit box, so they look for higher credit scores. They also may have more stringent collateral needs to secure your loan. Another option may be crowdfunding. I know here locally in the Pittsburgh area, 2 crowdfunding companies come to mind, one being Kiva, another being Honeycomb Credit. With crowdfunding, you start a campaign and anyone can help fund your business. Usually you have to have a strong online or social media presence. So that may be a pro for some entrepreneurs and it may be a con for others. Also, you may have to reach out to family and friends and ask them to make a contribution to your business before the crowdfunding platform will open it up to other members of their platform. Another option is a community development financial institution, or CDFI, like Bridgeway Capital. We often have a social mission and we look to create social impact with our lending. What may be a challenge for some entrepreneurs is CDFIs often look to lend in low to moderate income communities. We also really focus on serving underserved businesses and businesses owned by minority women, veterans, and disadvantaged business owners. So next, let's talk about the process to apply. So 6 steps that we'll talk through. First step is just taking that leap and getting started with your application. If you're going to apply with Bridgeway, for instance, this could be going to our website and completing a loan inquiry form. That'll help get the process started. And as you're completing the application form or loan inquiry form, some things to think about. Yes, you're applying for a loan for your business, but just know that you will be asked to personally guarantee and you will be asked to pledge collateral. And we'll talk a little bit about that collateral piece in a moment. Be ready to answer questions. Also, be ready for multiple steps within the application process. I always tell my clients it's more like applying for a mortgage than a car loan. So you want to expect at least 6 to 8 weeks, month and a half to 2 months for this process. So please don't wait until it's an emergency before reaching out to your small business lender. So after you complete the loan inquiry form, a Bridgeway Capital loan officer will reach out, and we really want to understand your story. So please be prepared to discuss your vision with us and your business needs. Please have your business plan, your projections, or your project narrative already completed so that we can discuss and review. Once the loan officer gets an idea of your vision and how we're able to assist with your project, the next thing that we'll do is kind of walk through the process. We'll send out application forms, and we'll also send out a checklist to let you know what we'll need or what you'll need to include in the application package. Some examples would be entity documents. So if you're an LLC, we'll need to see your LLC certificate of organization. If you're a startup business, again, pre-revenue to 3 years, we'll need to see a business plan. If you're an existing business, we'll want to see your financial statements. Typically, we want to see an income statement and balance sheet. It's a plus if you're able to provide cash flow statements, break-even analysis. We'll ask for sources and uses of funding. So sources, you'll tell us if there's any other lenders involved in the project, and also what equity that you're going to put into the project. We'll ask you to complete personal financial statements, get an idea of your personal financials or your personal assets and liabilities. And some other documents are going to vary depending on the project. So for instance, if you're leasing a brick and mortar location, we'll need to see a copy of your lease agreement. Once the lender receives your application package, reviews the package, then your lender will prepare a proposal and submit it to underwriting. Or depending on your lender, maybe it goes to a loan committee to be reviewed. However, that next step in the process, we're really going to review your application using the 5 C's of credit. So let's talk about those 5 C's briefly. Character. That's taking a look at your credit history, your experience, and how well you're able to articulate your vision and your story to the loan officer. Cash flow. Personally, I would say that cash flow, or also known as capacity, is probably the most important for a lender. That's being able to demonstrate your ability to repay. The lender is going to take a look at your net revenues versus your loan payments on an annual basis. Capital. That's your skin in the game. Lenders typically want to see that you're able to, or you're willing to invest, just as you're asking us to invest. And this capital amount is going to vary by lender. So for instance, we talked about commercial banks and how their requirements may be a little bit tougher than, say, a CDFI's. So they may ask that you inject 20% of capital, or that you put 20% equity into a project. Where some lenders may be okay with 10%, 15%. So that may vary, but just know that lenders are going to ask that you're able to have some skin in the game or make some investment personally into the project. Conditions. So that's taking a look at industry, market conditions. What are some of the external factors that are going to impact your loan? And collateral is the lender's security. So for example, if you're applying for a loan to purchase real estate, that building or property is going to be Bridgeway's collateral or the lender's collateral. Typically, lenders will place what's called a Uniform Commercial Code or UCC, also known as a lien position against business assets. Business assets will include your existing or new equipment and furniture and fixtures. Physical assets generally is what lenders are mostly concerned about, but in some cases it may also be your accounts receivable. So after the review, we hope it's a favorable review that leads to an approval. As I mentioned, this could take about 6 weeks from the time that we get our initial application. If you're conditionally approved, then a lender will issue a commitment letter that highlights the terms and conditions, the interest rate, the term, or how many years or months the loan is for, what your estimated payment will be, what the closing cost may be. If you agree to all the terms and conditions of the loan, then you'll sign the commitment letter, return it back to the lender, and move on to the next phase, the final phase or step in this process, which is closing your loan. So typically before a loan closes, there will be a list of closing conditions that we need to meet before scheduling the closing. At this level, we want to see that all lease agreements and other agreements that were provided to us are executed. We'll also ask you to provide evidence of insurance. Depending on the type of insurance, your lender will want to be listed as a lost payee or as a certificate holder. At Bridgeway, we will send you a closing checklist, or closing condition checklist, to really highlight everything that we need, all the documents that we want to receive before we schedule your closing. Once all those documents have been satisfied, it's now time to schedule your closing. We'll pick a time and a place, and you'll come and sign the loan closing documents, and you'll be able to choose how you want to receive your funds. Typically, we disperse by ACH, which is like a direct deposit, showing your bank account the next business day, which is a free option, or a wire transfer, which typically has a $25 give or take fee associated with it, but you will receive the funds that same day. Again, my name's Aldrich, Growth Loan Officer at Bridgeway Capital. Here's my contact information. If you have any questions or if you would like to move forward with a loan with Bridgeway Capital, please reach out, for I'd be more than happy to work with you. Thank you.